Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Be sure to share your thoughts in our comment sections, like Opening Bid on YouTube, and hit us with those 5 stars on Spotify and Apple Music. We greatly appreciate your support. And Happy New Year! We want to bring you our best conversations on that automaker slash robot maker slash Trump trade Wall Street has fallen back in love with, Tesla. First up, L&F Investor Services CEO Alexandra Merz. As a self-described Elon fangirl, she runs the account Tesla Boomer Mama on X, cultivating a community of other Tesla lovers. But she's also an investing pro with some very interesting calls on Tesla that we should all be watching going into 2025. Take a listen. Tesla investor Alexandra Merz, better known as Tesla Boomer Mama on X. Alexandra, I love that name. We have a lot to talk about, but how did you get that name? I need a cool name like that. It's just my name I have on X. It's not as cool as yours.
I can make you a name. Brian. I'm not
All right,
sure
we'll take that offline. Well, how did you get that? How'd you think of that name? I mean, that's hilarious.
It is. We discovered Tesla. Discovered is not the right word, but we bought our first Tesla in 2020. And I was so amazed. I felt like I have to talk about it. And what better platform than Twitter? I had a Twitter account, but with a completely different name on it because I was actually immigrating from Europe to United States, and that Twitter handle was dedicated to that. So I had to change it. And I was like, okay, I want to talk about Tesla. There's no doubt about it. And it's been the case for the last 4 years. But what else? And I'm a mama. I'm a mother of 5 now young adults. And I'm getting close to being a boomer. And I have a strategy that rather underselling myself and people thinking she's a cute boomer than a late Gen X. So there it was, Tesla Boomer Mama.
That is impressive stuff. Out of all the guests we've had here on Opening Bid, I'm really looking forward to having a discussion with you because in many respects you are the Yahoo Finance community, a passionate retail investor that's just trying to better understand companies. In your case, it is Tesla. So before we go into some of I guess the aspects of Tesla, as a retail investor, what do you do? We're seeing the markets under severe pressure. As I came up to start taping this episode with you, I mean, Tesla shares were down 8% because some other tech stocks were down. Like, take us through your typical day when we see this type of volatility in these markets.
Well, my typical day is actually my day job, right? So I'm not, as a retail investor, in front of the Yahoo screen all day. I'm going there from time to time, but not scotched to it. So the advantage we retail investors have, clearly, is that we have a completely different time horizon, right? So a daily mess like today doesn't really affect us. It's actually a buying opportunity. I constantly dollar cost average into Tesla. And so for me, this is just another good opportunity. So days I want to purchase, I'm actually very closely monitoring the market, seeing when I do that. But there are days I don't even look at the price anymore because my horizon, I've very clearly decided my horizon is at least 5 to 10 years. And Tesla needs that. I really caution anybody trying to short-term trade Tesla and any other tech stock for that. So if you have the time horizon, if you have come clear with what you want with a stock, it's actually very easy to digest days like that.
So on days like this, stock is down really on no apparent fundamental reason. You're a buyer. I mean, for you,
I am.
You just see a great opportunity looking out over the next decade, and this is just one moment in time.
That is correct.
Are you in the Cathie Wood camp? I think Cathie came out, friend of Yahoo Finance, frequent guest, always enjoy talking to her, but she came out recently, $2,600 price target on Tesla by 2029. What do you think about that one?
It's a very reasonable price target. Mine is actually higher, not that I am doing as much extensive research as they do. When Cathie Wood and the ARC team came up with that price, they have not included Optimus. And we will actually see Optimus ready, Optimus, the humanoid bot that Tesla will start selling to third parties end of 2025. And for me, that is the biggest opportunity of all the Tesla opportunities out there. So if you consider, like Cathie, that just cars, full self-driving and energy bring you to 2,600 in 5 years, you should include the bot and you'll get to completely different numbers.
So what's your price target then?
Well, I'm very convinced that this goes in the 5,000s or 10,000s once people understand what Tesla is all about. Tesla currently is still looked as a car maker. Tesla is anything but. I mean, these are robots on wheels. Oh, before I start, maybe I should actually ask you, Brian, do you own a Tesla? Have you ever driven a Tesla?
I don't. And I love it. I love when guests ask me questions. No, I don't. But let me tell you what I do own. Not that I don't appreciate Tesla. Love the technology. I get it. So I'm still a car guy. Always been a car guy. I own a gas guzzling Cadillac Blackwing, and I bought a Corvette 2019 for my 40th birthday because, look, I have no kids. I have no life. This is all I do. So why not? But I appreciate the Tesla community.
Good. Well, you should. We're great. We're a great community. I have to say this community, especially on X, but there are also communities outside of X, reunites, in my view, the smartest of the smart. They're just great, and a great connection between all of us. I mean, some have very specific rabbit hole, deep down knowledge. Others are more in the more broader economy. It is amazing how these people come together on a subject like Tesla and how much enthusiasm there is. Now, to get back to your question, it is clear that when people have not used a Tesla, and certainly not used FSD, it is very complicated to understand what a robot on wheel actually is. And they then focus on any car metrics that we know, because typical analysts will look at GM or will look at Ford and try to compare, or Toyota or whatever it is. And that's just not it. That is like comparing the old style phones with today's Apple smartphone or Samsung smartphone. So the comparison is just so different. But what is even more astonishing to people who have not experienced it is how actually this car experience, this car full self-driving technology is the root for so much more. By understanding how you can visually digest whatever is out there and make the car move in consequence, you actually understand so much more than anything else. Because there's nothing else comparable where people have mastered vision to action. And so, it is amazing to talk about. It's amazing to think about it on a day-to-day basis, what this is possible. But what people often ignore is how this is actually now just one puzzle piece to this bot that's going to come up, because there again you will have vision of the bot then acting on behalf of the bot, doing services, doing labor, doing services for people at home, for whatever else can be made.
I want to get back to the humanoid robot. It's Optimus. It's a topic that I actually I really enjoy covering because I am fascinated by these robots. But you recently had it was like a day or two ago, a cool thread on your X account looking at, or just talking about, if Tesla's still selling cars to, I guess, or just selling cars, I guess, through their dealer network over time. I mean, do you see a day where Tesla is no longer doing that and they are just operating a robo-taxi fleet?
I do. And I'm in the minority for that. I actually ran a poll. You're right. Thank you for going on my X account. I ran a poll asking my 135,000 followers and anybody else who saw the poll whether they could imagine that at one point Tesla would not sell cars to the retail customer. Now, the good thing, just to also insert that, Tesla doesn't have a dealer network. Tesla sells directly to the customer, which is much more cost efficient. No bad purchasing experience where you're for half a day stuck in a dealership doesn't exist. You do all your ordering online and then you go and pick up your car. But anyway, so will there be a moment in 10 years, in 15, in 20 years, where it won't make sense anymore to sell cars to the consumer, but rather use those cars for the fleet, for the Tesla-owned fleet, which as robotaxis will serve people all over the world, but initially, obviously, in the United States, probably China, and very soon Europe. And then, has such a yield on those cars of incoming recurring income rather than selling it up front. You have to understand a car makes between $5,000 and $10,000 of profit the moment you sell it. So you have one moment where you are getting profit. If you're running it as a robotaxi, you obviously have a recurring profit, which is much, much higher. There you're getting into the 80 to 90% profit margin. And if you can use that car for 10 years, why would you sell it? Why would you give away the tool that makes you the highest margins?
That was LNF Investor Services CEO Alexandra Mers making a $10,000 stock price call on Tesla. Can you imagine? After the break, we're going to dive deeper into the company's valuation and the competitor landscape. Hang tight. Welcome back to Opening Bid. Today we're looking at some of the key calls on Tesla. Up next, Gerber Kawasaki's very own Ross Gerber. When we filmed this episode before the election, Gerber was dumping his Tesla stock. Now that President-elect Trump is headed to the White House with Elon Musk in tow, listen to what Gerber says about how he doesn't see that as truly game-changing for Tesla.
So I always follow your views on X, but you mentioned Trump before we went to break. What do you think the impact to Tesla's sales, its profits, just its overall business because of Elon being all in on the former president this election season?
Well, the good news is, what was that guy's name? Radin Kozic, the Chechenian warlord who brutalized and murders people, got a new Cybertruck. So that's probably good advertising. So Donald Trump got a new Cybertruck. And what I think is, there's probably Republicans lined up by the dozen, to buy Teslas. But actually that's not happening. So this pivot away from the liberal, climate-loving, ocean, tree-loving people like me who bought tons of Teslas and want to save the environment to MAGA-loving, gun-toting, tariff-loving people, especially a guy who exports cars. Donald Trump would be the worst thing for Tesla that you could ask for. Not only does he not help sell cars, which hopefully you'd think maybe we'd sell a lot more cars in Louisiana, but I don't think that's happening. But you have this shift to oil, which is what Donald Trump is all about. And so, Donald Trump's supported by the oil industry. The oil industry are his biggest donors. Russia is obviously one of his biggest supporters. And so, the fundamental concept of what Tesla is diametrically opposed to Donald Trump's policies.
Let's play hypotheticals here because, why the hell not? Let's say former President Trump does win 4 more years in the White House and Elon becomes some form of advisor. As a Tesla shareholder, what do you do?
Well, I told you what I've been doing, which is I've been selling off my stock. And so I think Tesla is in a really tough position because they don't advertise. So there's no advertisements that are going to happen anytime soon that promotes the quality of their products, which is still, I think, the best on the road. It's really a quagmire where you have the best products in an industry, but a CEO who doesn't actually work there, who doesn't try to sell the cars, and the company itself doesn't advertise. And we've seen sales go down, and that's what's happening. Sales are going down. If you're expecting a great quarter, you're wrong. They're not selling any Teslas here other than basically discount. If you look at the used car market, it's just flooded with Teslas. I can't even sell the Teslas I have for anything close to what I think they're worth. So this is not good. So here's this great company with all this great potential, but it's basically languishing now because the CEO works at Twitter. And, I don't think there's any confusion what Elon cares about. And if he plays a role in the Trump cabinet, it would be because of Twitter. It's not going to be to benefit Teslas because Elon and Trump want to control the narrative on Twitter. And so, that's why they have a relationship. Elon's thinking maybe he'll sell some advertising this way, but it's actually worked the opposite.
Maybe because this is something I'm really passionate about. I am fascinated by succession plans and boards, and I'm still covering what happened between Chipotle and Starbucks recently.
Yeah, what a story that is. Huh?
Just wow! Big time surprise. Is there someone else at Tesla that could run Tesla? Like, what does the succession pipeline look like?
Well, no, when he rolled out Investor Day, I think it was almost 2 years ago when I went out there and we were all fighting and I was running for the board. That was sort of like to mollify me. and like here are all these great executives, if you look at that list of, let's say, 12 or 15 people, most are gone now. And the people who really could run Tesla, who were running Tesla, were all fired, including Zach Kirkhorn and Martin Viace, who were crucially important to Tesla's operations, along with Jerome Guillion, who ran the factories. Anybody who gains any power at Tesla or other Elon companies is immediately dispatched, So, once again, I think if you invest in Tesla, it's Elon's boat, and you get on that boat, and where he's going to take you is where it's going to be. But, I fear that Tesla's best days are behind it because of this lack of focus on Tesla. I've lowered the position substantially. I haven't gotten out of the stock because I still think the products are the best in the world. And I think that there's still this upside potential, whether it be in robotics or full self-driving, that may happen. But as the days go longer, my hope diminishes as I'm invested.
I'm feeling the vibes between us right now, Ross, so I'm just going to roll with this. I'll tell you a quick little story. So I was an analyst. I went to a Starbucks Investor Day in New York City, and I've told a couple close friends about this, never really made it public. So at the event was Howard Schultz. I'd written some negative things on Starbucks, crunched my numbers, went to the stores, did my thing. Came over to me. We talked for like 5 seconds. He called me an a-hole and then walked away. They say you never forget a good insult. But to that end, I mean, Elon has attacked you on X.
Yeah.
I mean, what is that like for you? For me, I think it surprised me when Howard did that to me. Now I've taken it in stride. I think it's funny and maybe a rite of passage. But like, how have you dealt with that?
Well, first of all, I'm honored that Elon takes the time to worry about the things I say, because I know he pays attention to me, whether he likes it or not, or people like it or not. I think ultimately, if you don't understand my goal is to see Tesla be successful, then you don't understand me. You know what I mean? Like, I helped Elon tremendously in 18 and 19 when things were really tough, and, stuck by him and, invested money when nobody else would. It paid off for me. I'm very grateful for that period of time. Those 4 years were great. But the last 3 years have been horrendous. And if a CEO doesn't like the criticism from his investors when those investors might have an opinion that differs from them, that's, I think, actually fairly normal. But then to insult and attack people who don't agree with you is really just the way Elon is. Now, personally, I don't care, like in the sense of people can say whatever they want to say. It's not going to change. I control billions of dollars, and I'm going to allocate it for what's best for my clients, because what matters to me is my clients and my firm.
Last but not least, Bank of America Securities senior automotive analyst John Murphy. We discussed the competitive landscape of Tesla's robo-taxis for companies like Lyft and Uber and how all this might change society. Check it out. Are you a big believer that this country is going to be filled with cybercabs?
So I think autonomy is something that's far more important than people are realizing. There's the simple side of this, which is the robo-taxi fleets that I think the cybercab will probably play an important role in. But to be a selfish New York-centric New Yorker, which I've been for my entire life, we've done a lot of analysis on New York City, and there's a little over 13,000 yellow cabs here in New York City. They drive about 1 billion miles a year, right? So if you think that you can get your cost per mile lower than them or a human driver, that's less than $1 a mile. I think you and I would be happy to pay $2 a mile.
I just paid $25.
Yeah, I know. I mean, the cost of moving around New York City is incredibly high, and you're going very slow. But if you could take that down and undercut, taxis and Ubers and Lyfts dramatically, you could have a huge business model. I mean, whether you pick $2, $3, $4, $5, each dollar above $1. So if you do $2, you're doing $1 billion a year in EBIT. There's actually room in New York City. It's hard to believe. Around 4 o'clock in the afternoon, late in the evening, and in the outer boroughs, right? Being a kid from the outer boroughs, there is a need for transportation there. So if you could go out and you could say, listen, I'm going to help you with your underserved community that is a hard time getting to work and getting their kids to school, and I'm going to charge them $2 a mile, which is a very efficient way and low-cost way to get people around. There's a huge opportunity in major cities. That's the easy part. I think the more interesting part, and this is something that has not happened for almost 100 years, is the speed of travel in vehicles needs to go up. And the fundamental utility of this industry, which most people don't even really think about, is to get from A to B quickly. And the reality is that has not changed for the better part of the last 60 years, since 1956, when we had the Interstate Highway Act put in place. That's when we had high-speed travel increase or improve dramatically. Take it back even a little bit further to the 1910s when the Model T came into sort of full effect and was pumping out millions of units a year. Public transportation really ramped up. People could move farther and faster and spread out. So that's kind of the precedent. If you think about New York City, once again, to be New York-centric, in 1910, the population was about 2.3 million folks. As people could move out, it dropped to about 1.6 million in the following decades and has never grown since because people could move in and out quickly. That was brought to bear by autos and public transportation. It hasn't increased since then. So the reality is autonomy, if it is successful and a vehicle can't hit something else, the safety level has gone up so dramatically that the speed of travel should be allowed to be increased. And there's kind of this sort of ongoing sort of governor from governments that limits your ability to create incremental value for the consumer. It's called the speed limit. I mean, getting in a Honda Accord and a Mercedes S-Class, you're getting to the same place at the same amount of time.
Yeah, well, I've got a big gas guzzler with 500 horsepower. Why do I still have to go 55 miles an hour?
There you go. Well, if you could drive, you could drive faster, safe. But the reality is, people start spreading out, and a lot of the real estate in the country that is underused could actually be utilized, and you could create this great economic growth. Think about what just happened in China over the last 10 to 15 years. Although the economy is slow at the moment, the reality is the growth in the auto industry and the increase of speed of travel for their society drove a significant part of the high single-digit GDP growth. We wonder why we're stuck at 2 to 4% GDP growth, hoping for 4% someday in the U.S. And the reality is people can't move around faster, farther. In fact, actually, the speed of travel is coming down because traffic is going up. The reality is if somebody could travel 50% or 100% as fast or double the speed of travel, their capacity utilization on the road gets cut in half and it creates more space. I mean, there's all sorts of things you can do here. But autonomy, I think, beyond robo-taxi has to be something that is thought at sort of the federal and state level as to what you can do with it, and creating dedicated high-speed lanes for these high-speed vehicles. We have precedent for that on HOV. Really could change the dynamics of sort of the economy and society, right? The more people move around and see each other, they realize they're not different. That helps, from a social perspective as well.
You're really blowing some minds.
So there's some real opportunity from an economic growth structurally and societal benefits that we get off the internet and see each other.
So if Tesla's coming out with a robo fleet, I mean, what does that mean to an Uber? What does it mean to a Lyft? But what does it mean to General Motors and a Ford? It strikes me as a big structural change coming to how we live our lives.
So I think it's a huge challenge to all the competitors, whether it be the fleet managers or the other manufacturers. I think to your point earlier, Mary Barra doing a great job. I think Cruise is going to be relatively competitive. Other than that one snafu, they've had other snafus, but that bad handling of that accident. I think they'll be in the race with them, with Tesla, Waymo, Cruise. There'll be a couple other players that come in. Ford's got to really catch up pretty dramatically. I think it means a lot in city centers, as I mentioned before. Those companies, at least the D2 or the D3, however you want to define Stellantis these days, don't play that big in city centers. So it's not an immediate threat to them. But if we get into that world that I just talked about increasing the speed of travel, it is going to be a real risk for them, and it's something they're going to really need to think about. People might need less vehicles. People might decide not to share their vehicles and have these personal vehicles. We could spend hours about the efficiency of the asset utilization, which is nowhere near as bad as the bears would think. It's actually reasonably efficiently used, the asset itself. But I think they're going to have to do a lot of work in catching up in tech.
This is your latest episode of Opening Bid. Once again, be sure to hit us with those likes, follows, and subscribe wherever you get your vodcasts. We hope you have had a great holiday season. We're so excited to see you back again for our 100th episode on January 6th. We are churning these things out. Don't miss it. Thanks for joining us.